All right. What is up? And welcome back to another episode of How to Invest in Commercial Real Estate. And
breaking news, OSU won a football game.
They did?
Oh, yeah. They took out number 25th, number 23rd, Kansas.
Yep.
Can't believe it. Don't know how that happened.
Is that how bad they are when they take out like the 23rd team?
Well, that's not too bad.
That's a pretty good win for them, as bad as they've looked at times this year. Yeah. Anyway, what do you got for us?
It's the best time of the year. It's the best time of the year. It is distribution time, baby.
Woo!
Sweet.
Distribution time, and we love distribution time because it's when we get to send returns to all the investors that entrusted us with their money. And it's not a little bit of money, it's a lot of money. How much are we sending Criterion? How much are we sending out this quarter?
Yep, so Criterion sent out $250,000 this quarter, right about level where we have been the rest of the year. So nothing drastic.
Precision Equity, of course, we've been around a little bit longer, but we're in excess of $600,000 sending out to investors, which is amazing to think about.
That still blows my mind, actually. We were talking about it before the show. That's nuts.
It is. It's awesome because all that money we're giving investors, it's money that we can hopefully reinvest for them. And so I don't know any one of my friends that gets to send their friends and family over $2 million a year in distributions. And that's pretty awesome.
What's pretty awesome for me is there's a high percentage of people that get more than one check, you know?
Yeah.
Like a lot of people open their mailbox, really consistently during this time just because they know they're getting a lot of checks in the mail. But we actually do ACH distributions now. So
yeah, you don't get the joy of opening a check, but from Precision you do.
Yeah, I kind of like the checks.
I kind of like them too.
I did like actually today opening my bank account and seeing all the ACH deposits from Criterion. So that was nice.
That was good too.
So we were talking before the show, just what do we talk about? How do we do this today? And I felt like if we could just focus, we're always talking about these new properties or these new concepts, but very rarely do we kind of take a rewind and go back and just look at the portfolio, look at these properties that, a lot of the listeners have been able to partner and invest in. A lot of these properties we just don't talk about anymore, not because they're not great, but just because a lot of them are fairly uneventful, which is
that's a good thing. The best kind.
Great. Yeah. So we're going to pull up the investor sheet here. So if you are a member of our investor list, which you should be if you're not, it's super easy to sign up. You just go to the website, thecriterionfund.com or howtoinvestincre.com. There's a button in the top right corner that says join our investor list. So if you're signed up to that, you get a monthly newsletter from us. If you're like me,
and you drop your phone.
Drop my phone, yeah. But if you're like me, you probably don't open most of these newsletters you get because everyone sends you a newsletter. But ours is actually fairly interesting because it goes into a lot of the properties. I mean, it's not bad. I'm
just telling you, it depends on who you ask.
Anyway,
tell us about it.
It's got lots of pictures. It's got lots of pictures, guys. But anyway, it goes through each of these properties super specifically to just give you an idea of how these properties perform, even if you're not invested in them. And we had this idea a few months back because if you're an investor in a deal, you get an update from that deal every single quarter with a narrative. There's an investment report that just shows any contributions or distributions that you made or received during the quarter. So you'll get one of those, but if you're not invested in the deal, a lot of the times you'll miss information about these deals. So that was just our bad. We weren't relaying that knowledge to everyone.
Yeah, it may be that you thought about investing in some of these opportunities and then you're wondering how they're doing. And so today, that's why we're going to go through some of the stuff we got going on. And if you thought about investing or if you remember seeing it, now you're going to hear maybe how it's doing.
Yep. So let's start with developments that are completed that are on the market for sale. We have 3 of those currently. So we have some excess land in Dallas from a kiddie academy we developed that is under contract for sale, supposed to be closing towards the end of this year. Super excited to get out of that one. We funded the deal a couple years ago. Great little project.
Let's see. We've sold the kiddie academy, but we just haven't sold the land. Is that right?
Yep. And that is in permitting now for a concept that is doing like some sort of pub, I think, there. Okay. So they're in permitting with the city of Dallas right now. Lending is teed up. I believe there's equity groups teed up. And right now we're just kind of waiting on permits so we can go in and close and exit this piece of land. But like I said, it's in contract.
And so when we sold the Kiddie Academy, did the investors, what % of their original capital did they get back?
About half.
Okay, so then once the final land sells, they'll get the rest of their capital back plus whatever return there is available.
Yep.
Okay. All right, next one.
The next one is another Kitty Academy, and this one is in New Jersey. So this one is on the market for sale. It's completed. The tenant has taken over operations. They're leasing up, and right now we are trying to exit that one. So it's on the market for sale. We've received a couple offers. We've countered a couple offers. We actually just countered one, a couple of weeks ago for,
And if I remember right, this was part of a 2-property portfolio.
Yep.
And then we sold the one in Houston.
Yep.
And then how much of the original investment did investors get back?
70% of their capital they got back from the first asset, and we're projecting a very similar check once we get out of this asset. So around a 1.4 equity multiple.
Okay.
Not too bad.
The next one, this is our latest development. It was our second one in Owasso, I guess, but this was the development of the Salad & Go and 5-tenant strip center in Owasso. So those have been completed. They just finished up construction the past couple months, and we just got those on the market for sale. I don't even know if the listing broker has sent out the initial email blast. So again, what are we, middle of October? So, I mean, it would be tight to have an exit this year. Probably not going to happen. We'll probably look for exits on the Smith Farms retail in the first quarter of next year, which
not too bad considering. When did we raise money for that? When did we start on that?
Not even a year.
Yeah. So less than a year.
Maybe right at a year.
So hopefully people can expect their money back within 18 months, maybe.
Yeah. Maybe and there's a couple Salad & Goes on the market right now. So we priced it fairly competitively to hopefully move. But yeah, we're very optimistic that those can exit in the first quarter of next year. All right, so that is finished development projects that is on the market for sale. The next one we're going to go into is all of the cash flowing shopping centers we have. So we have what? 1, 2, 3, 4, 5, 6, 7, 8. Holy cow, we have 8. So the first one is Village at North Shore. This is like 200,000 square feet. This thing is huge in Slidell, Louisiana.
Just outside of New Orleans.
Yeah. So this one we bought, it was like an 8-cap shopping center. So it kind of cash flows great just by itself, but it was severely overparked, and there was one pad site next to it, and everyone else has pad sites. So we see the value in carving off 3 pad sites and selling those. We had initially a car wash interested, and it kind of forced us to go through the permitting process with the city and the feasibility to just make sure a car wash could actually go there. We did that, figured out the car wash could go there, and then they backed out. But we've actually got 2 more on the hook, and I believe there's like a Take 5 oil change or something else.
Nice.
2 more car washes that are interested. Is that what you're saying in that one spot? Or
Yep, 2 more car washes. One of them is a reverse build-to-suit. One of them is build-to-suit. And then O'Reilly Auto Parts is in committee
That'd be great.
to submit an LOI to buy about half an acre. So that would be great.
I think we're still waiting on third quarter distribution numbers for that property.
Waiting on third quarter update and third quarter distribution numbers for that property.
But everything we've heard, I think it's going just like we had planned.
Yeah, I mean, I think the only thing abnormal that's happened is obviously, Marshall submitted their, I don't know what they call it, but they're going to go dark, I think, in the middle of next year and then pay through the end of their lease term, which is like end of or middle of 2025, I think. But they were at a fairly low basis, so we're optimistic about backfilling them, and we've got a ton of time. And like I said, they're fulfilling the rest of their lease. They're just not open, which kind of sucks.
so we're going to start trying to lease that up now?
Yeah, it's already, I believe it. I mean, it should be on the market.
Listed. Okay.
Good.
Yep. All right. The next one is Stonewood Village. This is about 50,000 square feet in Stone Mountain, Georgia. We bought this in May or June of last year.
For those that don't know, it's just east of Atlanta, southeast of Atlanta.
I have no idea. Yeah.
It's basically a suburb of Atlanta.
I went there. Did you go there? That's what I thought.
But
That's what I thought.
I just
I
have a
went
sense
there.
of direction.
Joel didn't go?
How do you guys not know where it is if you've been there? An awkward edit we're going to have to do now.
Directionally challenged.
Anyway,
Followed our GPS.
Stonewood Village is honestly one of my favorite little properties because nothing wrong happens right? We had a little water leak the other day, and it was almost like refreshing. Like, thank God.
Besides a truck driving into the side of it, nothing goes wrong.
I mean, okay, that was obviously out of everyone's control, and it was at like 2 a.m., some random U-Haul driver. But yeah, thank God
But as
for
far as
insurance.
the tenants paying their rent and it cash flowing like we had anticipated, yes, it operates like it should.
Yeah, last year we did like 4 or 5 lease renewals there, and every tenant was ecstatic to renew. Every tenant wanted options. I mean,
It's
it was
solid property.
a great piece of real estate. We actually have the director of operations going out to that property tomorrow. If you're curious, if we ever go back there after we buy it, we do. Joel doesn't.
Joel didn't, but
We do.
Joe goes where he wants to go.
Okay, the next one. This property is in St. Louis. This is Gordon Plaza and Farber Center. So this one we bundled with another shopping center, and the equity raise was called the St. Louis Retail Fund 1. So that one investment owns both of these shopping centers. And unfortunately, right after we bought this shopping center in May of last year, it kind of immediately had this exodus of a few tenants, which sucked, right? One tenant we had to evict, another tenant moved, so she moved her business closer to her house, and then another tenant left with like 18 months. It was probably a year left on their lease term. So it was just immediately like, welcome to real estate ownership.
Yeah, we had some
3 tenants gone.
We had some roof issues too.
Yep.
That we had to deal with. So, you know, we talk about planning for worst case, and although I wouldn't say we faced worst case on this property, we definitely faced challenges. And the good news for the investors is we definitely set aside enough capital expenditure money to handle these issues, and we have plenty of cash on hand for both roof repairs, tenant improvement dollars for new tenants, leasing commissions, costs we're going to have. But we're just being upfront that has not gone quite as smoothly as some of the other deals that we've done.
Yeah, but you have to. I'm trying to figure out a way to say this, but not about myself. So that deal has $600,000 in cash, probably more, probably like $650,000 in cash. It's cash flow positive. It's got a new roof. We've fixed tons of capital expenditure problems. We've released a ton of tenants, and we evicted a couple bad tenants. So did we not pay out distributions during that time? Yes. Were we communicating all of these things while we were doing them? Yes. And we are about one tenant away, which we have the signed LOI. We've been negotiating the lease. And it's actually a tenant at the next shopping center that's kind of bundled together with that. But as soon as that lease is signed, we should be able to start paying out distributions. So it wasn't, oh my gosh, this is the worst investment ever. It's not paying out. It's something bad happened. We acknowledged that we need to pause distributions so we aren't digging out of that hole for the rest of the investment, right? Yeah. And I saw another partner of ours, Tyler, actually posted this quote, I think, but it was just about the effect of a bad decision early on is really hard to overcome cumulatively with good decisions. Like you can make 9 great decisions, but if that first one was really horrible, those 9 decisions those 9 great decisions afterward that aren't going to get you very far. It's all about making the right decision right then. So we had immediate loss of revenue. We immediately cut out the free cash flow distributions just to make sure that we could weather the storm. It looks like we're going to. We're very close. Distributions should resume hopefully at the end of the first quarter, maybe even the end of the fourth quarter.
Yeah.
Anyway, the next property is Marketplace Commons. So this is in that same investment. It's a little bit of a smaller deal, probably 40,000 square feet. Like I said just earlier, we are finalizing a lease with a brand new tenant that's called African Naturals. Really cool retail store. So they're going to go in there, and after that tenant kind of comes online, we should be able to resume distributions. Other than that, at Marketplace Commons, it does have, maybe a little bit of a roof problem. I think we put a Band-Aid on it for this year. Probably going to have to give it some more attention next year or the year after. But for now, pretty good.
That property, the distributions are with the other property, right? So we have to look at those 2 properties together to decide when to do distributions.
Yeah, so the fund up top is where the equity raise happened and the distributions happen, and both properties distribute to the fund, and then the fund distributes to the investors. So both of those properties are cash flow positive right now. Like I said, we're just retaining the cash in the property to pay for these leasing commissions and tenant improvements for the new revenue we're getting.
Yeah.
Okay.
Anyway, that's it with St. Louis. The next one is in Wichita, right? So a lot of people got involved on this deal. This was an equity raise we did in the beginning of January of last year, 2022. We bought 111,000 square feet in Wichita, Kansas, and it was basically this massive L shopping center, some big box tenants, a Dollar Tree, a lot of smaller shop tenants. And then we sold these 3 pads, right? And those 3 pads really allowed us to execute our home run of a deal, which maybe you can explain.
Yeah, so we bought the center at roughly 8.5 cap.
I believe so.
Okay, just roughly 8.75 cap. But the pads, when you carve them off, you sell those at a lower cap rate just because they're a simpler single tenant, triple net lease, maybe a little bit better credit than the inline tenants. And so we sell those at, what was it, 6.5 cap?
I think it was lower. I think it was blended. It was maybe 6.25.
6.25. So we're making a spread there, and we made enough profit by exiting those in order to pay back 100% of the invested capital. So now all the investors that are in that deal, now they've received more than 100% of their invested capital back, more than 100% of their invested capital, and we're still distributing cash to them. So that really is the home run of real estate investing. When you have no money in the deal and you just get paid checks without any money invested in perpetuity. And so that's where we are with Plaza West.
I calculated the net equity balance for Plaza West, and nobody quote me exactly, but I believe the net equity for each investor was about 60 to 70% of their initial commitment. And like Joel said, that's already been returned, and there's still quarterly cash flow. Plaza West made another great distribution this quarter. So super excited about that, right? Because now we're no rush to sell that. We have 10-year fixed debt at like 4.01% or something dumb
fantastic.
like that. So we're paying down debt like crazy because it was on a different AM schedule when we had more revenue. So it's not necessarily insanely cash flow positive right now, but we're continuing to push rent. So the property's appreciating like crazy. We're paying down debt like abnormally aggressively, again, because of the weird AM schedule from the partial sale. And it's still cash flow positive. So massive deal. No rush to really do anything with that. No news is good news.
And zero risk for the investor because they're not guaranteed on the debt and they have 100% of their money back. So they're really at a risk-free, 100% reward position.
Well, on top of that, a lot of our investors took that money when we returned the money and invested in another property. So they're getting paid on 2 properties basically for one contribution.
Bingo.
Okay.
Beautiful. All right, leaving Wichita, and now we're coming home. Okay, so Broken Arrow. We have 2 different shopping centers in Broken Arrow. There's County Line Shopping Center and Redbud Shopping Center. And Redbud was really the first acquisition of Criterion. Yeah. It's a small little 20,000 square foot neighborhood shopping center in front of a Walmart Supercenter. I'm sure you can guess the tenants. It's like every other little shopping center in front of a Walmart Supercenter across the country. So as I'm sure you can imagine, because it's got relatively the same amount of tenants, everything's fine. The tenants are there. The tenants are happy. We're renewing leases when they expire. I think the last one we renewed was towards the beginning of this year for the staffing company, and I think we got a 3-year or 5-year renewal. No
vacancies there?
No, we've never had a vacancy there. So
we're paying out what, 11, 12%?
I think it's 11. I mean, it may be like 10.5, 10.7, but 11-ish. We'll continue to push that. I think maybe next year it could be bumped a point.
That's still good. I mean, we've owned that now for 3 or 4 years.
4.
And so we've been paying 11% for the entire time that we've owned it, which is great.
Yeah, we've missed one. I think we missed 1 quarter. And that was this year, and it wasn't even because it didn't cash flow. It was because we had spent some money from a reserve account, and like deferred maintenance or leasing commissions on some of the renewals.
We had that water leak or something that we had to pay for.
The water leak.
So,
so really great little center. The next one is County Line Shopping Center. So this is literally a mile down 71st Street, still on 71st Street. This is the one that is anchored by Church on the Move. It's about 70,000 square feet. And this was the second acquisition of Criterion, I think. So nothing really happens there. I
don't think we've ever missed a distribution there, have we?
I don't think so. I don't think so. A great buy. I mean, you always hear money or people say you make your money on the buy, or it's harder to make money on a bad buy. County Line was a great buy. It just was.
we're making a great return for the investors now, but when we sell that property, we're going to make huge returns for the investors.
Yeah, we can't go into a ton of detail about it, but right now it's Church in the Move and Dollar General. Dollar General is expiring, I think, at the end of next year, maybe the end of January 2025. And there's kind of a bidding war on their space. Dollar General kind of wants to stay. Church in the Move would
love to expand.
Yeah, they've been received well by the community. I think they have thousands of people going to church there every Sunday, which is kind of mind-blowing for the square footage that they're in. But anyway, right, like kind of a bidding war over a space. So that's not going to be bad for the investor. So that's good news there. The next one is, it's not on the list. We missed one. The Criterion building, Criterion building in Owasso. That's where we office. So the last suite finished construction last quarter. The last tenant started paying rent last quarter. So it's been 100% leased, but we haven't been 100% occupied with paying tenants, right? Just because of that last tenant's been in build out. So now that is nice. We'll continue to stack up cash the rest of this quarter. And I would imagine we'll make our first distribution at the end of the first quarter next year. Cash flow positive, really doing great. It's a brand new building. So,
and then that we're starting to pay later than we thought. And just let's let people know exactly why that is. Construction took longer than we thought. Construction, because of inflation, post-COVID was higher than we thought. And we had a floating interest rate, so interest carry costs were also higher than we thought. So despite all of those challenges, we still are going to start paying distributions at the first of the year. The project wasn't perfect because of those things that I mentioned, but it's great that the property's cash flowing and we're going to be paying distributions.
Agree.
What about the Owasso gym?
The Owasso gym, same exact thing. Very small building. There's 2 tenants in there. The tenants pay their rent. We're paying distributions. It's a metal building. It needs some parking lot repairs. I don't know if we're going to be able to squeeze them in before the winter. You need like 80 degrees to hot patch, so we may get lucky. But yeah, no news.
Okay, good.
Okay, so that is a lot of time on what we currently have. Now let's kind of fastly go through what's in construction and then even faster talk about what's in the pipeline. There's a lot going on. So Smith Farms 2, this is the corner of 96th and Garnett. This is currently in construction. The Picklemans is a build-to-suit. The Taco Casa is a ground lease. That should be completed middle of February next year. We'll look for an exit probably Q2, beginning of Q3 of next year. Marine Creek is a build-to-suit Starbucks and multi-tenant strip center with a Shipley's Donuts, smoke store, liquor store that is currently under construction, about to go vertical. I don't know the estimated completion date on that one, so I'm not going to guess. Nucky's Hoagies, we just closed on that. The bank loan is scheduled to close at the end of this month, I believe, and then we can kick off construction there. Princeton Pad Sites development. Three of the 6 pads are moving. Chipotle is, I think, done. They may be open, I think, at the end of this month. We turned it over to them in September, and then they have about a month and a half to do TI work. So, again, should be done now or open. The other 2 ground leases, Salad and Go and 7 Brew, we turn those over to the tenants. They have a 6-month kind of building period before they start paying rent, so we're in the middle of that now. We should see all 3 of those come online to the market for sale by the end of the year, I would think. If not, first of the year. And again, look for exits of those at the end of the first quarter or in the second quarter of next year. The remaining 3 pads, we should look to mobilize hopefully before the end of this year or at the very beginning of next year. Just waiting on permitting for Fat Burger and the learning experience. Burleson is in construction, and I don't know the tentative completion date. I should. Owasso pad. Garnett 1, we are finalizing the LOIs and leases. The LOIs are final. We're gathering those and moving those to leases. We're targeting lenders for construction. Hopefully can close on that before the end of the year and get mobilized maybe in January. The learning experience in Grand Prairie, we have submitted second round of civil comments and should hopefully mobilize before the end of the year. The excess land, by the way, is nuts. We've kind of got it pre-leased. We've got somebody who wants to buy it. We're just waiting on the city to finalize the replat, and we can kind of just pick what we want to do. The business plan was to sell it to part of me just wants to sell it because we've got a great offer.
Mm-hmm.
Okay, what's next? That I guess is it for under development. And then the pipeline. Okay, so there's 3 or 4 deals probably before the end of the year. There's one closing in the beginning of November, and it's like the smallest deal ever. So if you don't get the invitation to invest in it, you have to promise that you're not upset with us, right? I mean, there's only so much we can do. We can't put a $350,000 equity raise on the portal because 99% of people are going to open it. It's going to be oversubscribed immediately, and then they're going to be pissed off at us.
Yeah, we don't want you pissed.
So anyway, the investors that...
So we're going to not piss you off by not sending it to you and having you get pissed that we didn't send it to you.
Because you'll be less pissed.
How's the plan? Good? We're sorry ahead of time.
Anyway, a closing in Henderson first week of November. You may not see a lot about that, but should be a great little deal. The next one is end of November. This is a learning experience, build-to-suit learning experience in Burleson, very close to the build-to-suit retail shopping center in Hawaiian Bros. We're doing there. So we'll see that close middle of November. You'll probably see packages on that come out the 1st of November. Very similar deal profile to the last learning experience we did, I would say. What else do we have? We have a build-to-suit Starbucks that's closing before the end of the year in Jacksonville, Florida. I would say, standalone with excess land. We've already got 2 offers, I think, in the excess land, so just need to close and flip it out.
We've got Carson City.
We have Carson City. That's probably middle to end of December. That's, again, a fairly small equity raise, so be Johnny on the spot with that in November. We'll probably launch that middle of November, closes beginning of December, I think.
That's the car wash or the...
No, that's the gas station.
Yeah, it's a ground lease to a Valvoline, I believe, or some other,
oil.
We're going out there in a couple weeks.
We're going out there next week. Yeah, we're going out there Tuesday to tour both of these sites. So flying into Vegas, immediately flying to Carson City. We've got like an hour and a half on the ground, check out the site. We're flying back to Vegas, checking out
Henderson.
The mechanic shop first thing in the morning. So,
and then we're flying straight back to Tulsa.
Yeah, very quick trip. Anyway, there's a lot more, but it's not closing until next year, so we're not going to talk about it.
Yeah, running out of time. Got so much, we ran out of time.
No, there's a lot going on right now. Hopefully you guys are getting involved. Pick a deal that you like and try to get invested on it and start getting the distributions. Once you start getting checks in the mail that you didn't have to think about or worry about, your life will change. You'll view commercial real estate and you'll view investing differently. I think I sent you guys something this weekend that talked about that the number one goal for people should be to separate their earning power or their income from the time that they invest in it. And that's what we want you guys to do. That's the only way to achieve the freedom and the wealth that you want out of this life. As long as you're trading your time for money, and even since you guys something else, we trade time for money so we can buy back the money that we traded the freedom for in the first place. So think about that.
Yeah.
Right? We go to work to make money, to buy freedom, to buy back our freedom that we traded for the money in the first place. Yeah. And so we want to get you out of that cycle somehow.
That's messed up.
It's kind of crazy. Think about this, guys. You sign up and the world tells you it's okay to go to work for 5 days a week, right? You're basically working for 5 days a week so you can buy back 2 days of your freedom on the weekend, Saturday and Sunday. Mm-hmm. And so that's the cycle that the world gets you in. And how they get you in it is they get you to get some student debt, and they get you to get a house with a mortgage, and they get you to get a car loan and credit card debt. And pretty soon you can't get out of the trade of time for freedom, time to get the money to buy back your freedom. And so by saving money and investing it wisely and getting distributions, now that money starts coming in without you having to trade your time. Eventually you'll be making enough money passively that you can quit your day job and get all of your freedom back. And that's really what we want you guys to try to do.
We really need to do another episode. I'm going to say it now while I'm thinking about it, about the rate of return your money gets matters, right? Because I think people think, oh, it's just double the return, so maybe you have to invest half the amount of money. You guys don't understand. Every discounted cash flow or like savings calculator people have seen for retirement is assuming you make like 7% on your money. Mm-hmm. Let's do that same calculation when you're earning like 18% on your money. And it becomes a lot more motivating to invest because it's a realistic number, like $15,000 a year, $20,000 a year. It becomes like, oh, I can do that. That's a normal thing. And you still get millions of dollars in retirement. Yeah. It's a very practical approach to investing. Yeah. But anyway, that is it for now. We will catch you next week on how to invest in commercial real estate.
Thanks, guys. Thanks.